How important is it that we got through $100 a share? And where do we go next from here? What's your upside?
We're still bullish on the large banks. All 5 large global banks exceeded expectations in the third quarter. So that's not only JP Morgan, it's also Citigroup, Bank of America, Goldman Sachs, and Morgan Stanley. And the results this quarter were really more about Main Street banking than Wall Street. Traditional bank lending and traditional bank revenues did quite well with better efficiency. On the other hand, Wall Street banking, capital markets, they were down year over year, quite significantly, especially fixed income trading. So the reason there's more to go is you have several call options with the banks. Maybe capital markets get better. We can talk about that. Yeah. Maybe we get lower tax rates. That disproportionately benefits the U.S. banks. Maybe there's some deregulation. And all while, you still have balance sheets that are the strongest in a generation.
What's the lesson? Let's just reflect on it briefly. What is the lesson of February 2016, when a lot of people got very bearish very quickly and the chief executive of JP Morgan stepped in a big way?
Well, the lesson for investors, and I was on your show around that time saying, this is an opportunity. The lesson is do the math. I mean, it's night and day, the balance sheets at banks now versus a decade ago. If you do the math, banks can absorb not one financial crisis, but 2 financial crises. I mean, you have some of the strongest level of capital and liquidity in a generation. So, bring it on. If you can have all sorts of scenarios. Back then, it was the oil situation, and that was the aftermath of some of the European problems. And if you did the math, you say you can take a charge and move on. That was not the case a decade ago. So the lesson here is, recognize that banks have the strongest balance sheets in a generation, that the situation, the revenues have been subdued, and that there's a lot of catalysts to still go further in the upside.
So, Mike Schumacher, banks are safer than they have been in a very long time, no question. That's what Mike Mayo is telling us. What about the opportunity for growth? And specifically talk about the Main Street that Mike Mayo talked about. What about mortgages? What about housing? Is there a little bit of a cloud on the horizon there that housing is not moving up the way we would like?
Probably a little bit of concern. I mean, David, I think if you look at the housing market broadly across the U.S., I know it's difficult to generalize, but not as strong as some people would like. I suspect you may get some disruption as a function of the tax bill. All sorts of permutations that might pan out over the next, call it 6 to 12 months. So, yes, if housing were a little bit stronger, people might feel a little bit better, but I don't think housing's in a terribly bad spot. I'm sure we'll talk about the rise in interest rates, but they're not terribly high. If you look at the 10-year Treasury, for instance, it's only 245, 246, pretty much where it began the year. That shouldn't hurt the housing market too much.